Sumit is ready to try his luck in the share market.
He is looking to invest in SME companies.
His confidence is based on the good performance of IPOs of SME companies in the last 2 years. In the past 2 years, a total of 163 IPOs have come in the SME sector. Among them, 41 IPOs are trading below their issue price, and among them, only one SME IPO has experienced a decline of more than 50%. The figures until November 17, 2023 show that one IPO has not been listed yet. One company has shifted to the main board, and one company has suspended trading. Talking about companies with good returns, there are 65 such companies out of 163 that are providing returns of more than 2 times. And among these 65 companies with good performance, there are 2 companies that have given returns of more than 10 times, and that too in less than 2 years. Now, the most important point is that out of a total of 163, 120 companies are trading above their issue price. In other words, approximately 75% of SME IPOs in the last 2 years are trading above their issue price, where investors are making profits. But despite the strong track record of SME companies, Sumit's broker and investment advisor Jayesh strongly advised against investing in SMEs. Sumit appeared quite disappointed with this advice, and he told Jayesh that the figures clearly depicted a 75% chance of making money and nearly 45% chance of doubling the investment. So, Sumit has this question in his mind: why is investing in SME companies so risky? And why are people afraid to put money into it? Market expert Santosh Singh believes that beside price action, it is essential to conserve fundamentals and liquidity because the minimum investment amount in SME company is 1.25 lakh rupees. In these shares, there is significant issue of demand and supply. Hence, market makers are crucial for IPOs of these companies, a role typically fulfilled by investment bankers. This is the reason why there is a considerable amount of manipulation in the shares of these companies. However, the numbers indicate that money has been made in these companies. So Sumit has another question in his mind. If someone is investing in these companies, when should they exit or sell their shares? According to Santosh Singh, one should decide when to exit before investing in SME company IPOs because the regulations in this sector are quite limited. If you get a good listing gain, it is advisable to exit. And if you have good knowledge of company's business and want to hold for the long term, keep an eye on its quarterly results. But Sumit still has a recurring question in his mind, and that is looking at the performance of the Jai Jalaram Tech and Cool Caps Industries. Both of these companies have provided returns of up to 1,000 to 12,000%. The question is to choose companies in the SME sector because not every company is bad. Some companies are good and are multi-baggers. Santosh Singh suggests that in drone, electronic, manufacturing services, cable and wire and pipe sectors, valuation can be considered, meaning companies with good valuation can be considered for a long-term investment. In total, the decision to invest in shares or IPOs of SME companies should not be solely based on the performance of the already listed companies. Besides that, fundamentals, results, and liquidity should also be considered, as there is a high risk of manipulation in the SME shares.